Mike, congratulations. So finally, we actually have a date for the spin-off.
We do.
So, what does your timetable look from now until then? It's basically, how do you evaluate it?
So I think so thanks for having me. We wanted to do this from strength. And so you see, as you mentioned, operating earnings up 10. Asia had another great broad performance. You had, all of its key metrics up in double digits from cash generation, new business profit, operating earnings. U.S. did well. So this is where we wanted to be for the demerger. Mm-hmm. And the work involved separating a 170-year-old company is material and is for the most part complete. So now you have a circular and a prospectus, mm-hmm. a shareholder vote, and that puts us into the fourth quarter of next year with those processes. So,
is this the start of a wider breakup?
It's not. We are going to stay and have stayed an active manager of the businesses we own. And the international businesses' primary lens will be markets with structural growth. So if we thought one of the markets didn't have structural growth or we weren't capturing that with our capabilities, then we would certainly look at doing something different. It doesn't matter where that is. We're not wed to any given market. You've seen us exit markets in Asia, product lines, entire businesses, the finance business, all good businesses, and someone else ended up with them. And exiting our home market, if you will, half our assets under management, right? I think so. We're being very disciplined about where we deploy capital and what we're not willing to hold, and that's not going to change.
Mike Wells, when you look at, you're spinning off at what could possibly be a quite turbulent time. Right, in markets.
Yes.
So just a couple of weeks ago, Swiss Re had to postpone the IPO of Reassure because large investors were not interested in it. Do you worry that you're spinning off M&G at a time where actually there's just not that much appetite for that kind of asset?
No, I think there's a couple of things that balance out. One, we're not raising any equity. So this is a demerger where the shareholders will get a share in M&GPrudential, and now, as you mentioned, branded M&G at the holdco. It'll still maintain the retail brands M&G and Prudential. Right. But again, it had its assets are up 6%. It had similar performance to other asset managers in the UK with M&G, but then that was offset by £3.5 billion of flows in the with profits product. So it's got three engines. It's kind of unique. I think it's a good cross-cycle business for people who want to capture retirement and savings. In UK and in Europe, it's been very successful. So I think it's well positioned. It doesn't have an event that it needs a market climate for. The shareholders will own both shares when they're done.
How do you decide the standalone value? I know you don't want to give me a figure, but actually, how do you decide it?
So the market does. So again, that's a bit out of our control. And I think you can look at the competitor set. There are some firms that are similar. Usually they have two. So there's some firms with an asset manager, some firms with an annuity book that provides stable earnings across the cycle. No one has the with profits franchise and the capital it has in it. So there's a bit of a unique variable in there that we'll see how the market values. But I think the results they're showing and the roadshow that's coming up and the prospectus will give market information to value it correctly. Obviously, we capitalize.
Right. So the starting value, it's not on the first day, right? How much
you'll have some share registry shift. We know people who have liabilities in pounds. There'll be a pound-denominated stock primarily, and the international will be effectively dollar-denominated. So you're going to have some portfolios say, I want more of a cash-centric pound-denominated company, and others say, I want more of a higher growth, higher return on equity, less cash-centric company in the international business. And so I think you'll see some adjustment in shares. That won't happen all in a day.
What's your biggest headache apart from dealing with this and the restructuring? How much focus do you have on negative yields? I mean, how do you do business in this kind of environment?
So we have moved over the last 5 years. We've materially reduced our exposure to interest rates and the products we sell. So you go back to the results for a second. 80%, a little better than 80% of the premium written this year is recurring, regular premium, and isn't related to any interest rate element. So we've moved the business further and further away from a spread type insurer. That was intentional and strategic, and that's a big part of what we want to do with the business. And so, it gets you out of the credit cycle sort of dependency on product, and it actually makes longer term relationships with the consumer.
But on the asset management, I mean, how much focus, fees have been compressed.
Yeah.
Do you see a revival of that industry over the next 2-3 years? What needs to happen? Is it consolidation before you can demand higher fees? So
different answers in different markets. I think in the UK, M&G's in segments of the market that have still maintained pretty competitive fee levels because they're longer term asset classes, they're real estate, they're more private asset classes, and that's the fee structure is held up well because the value is there. Mm-hmm. I think it's pretty hard to do aggressive growth against a passive right now and hold your fees. That's not their business plan. In Asia, eSpring had a tremendous performance in both net flows and earnings up at a double digit, and that's just that's getting product to consumers who are in cash. 65% of long-term savings in Asia is still cash. So the goal there is expand distribution, expand the business footprint, and 45% of their sales in the first half of the year were from products they didn't have 12 months ago. So that's about innovation.
Right. How much money have you spent so far in dealing with Brexit? So I guess making sure that you had European subsidiaries, and are you ready for a no-deal Brexit?
We are. We spent a little under, call it 30 million pounds, and that was to replicate the key portfolios for M&G in a Luxembourg structure, a CCAP structure, and that's all completed. So regardless of the structure, we're ready to go, and we don't see any additional costs or concerns from the structure of Brexit.
Do the Hong Kong protests affect your business?
So, we're watching the situation carefully, as I'm sure everyone who comes on your show says they are. It's we have a lot of employees there. It's a key market for us. It's a very successful business for us. So what you see whenever we've been there since the early '60s. So we've seen a lot of different issues in Hong Kong and its development. What you see in these situations is it tends to elongate sale processes, but it doesn't eliminate core needs. So we're still going to have clients who are worried about their children's education, about funding retirement, about their health concerns. So it just changes sometimes the length of a process. We saw that in the U.S. We've seen that in the U.K. That's the typical, with a risk-off product set like ours, that's typically the kind of impact we feel, but it's very early days in Hong Kong, and we are watching it.
But what is it, so a delay of 3 months, or a delay
It varies family
settles?
to family, it depends where they were in that decision process, and it's just not our Hong Kong business had an excellent first half of the year. Our China business was up 45% in the first half of the year. So our mainland China, both are obviously China, but the mainland China business was extremely successful as well. It outgrew all of its competitors in the first half of the year. So these are very, very healthy businesses with more than 90% of what they sell regular premium and 90% retention plus rates. So this is very healthy if they sold nothing. And that's where we wanted the business, that level of resilience.
Mike Wells, one final question when it comes to the life insurance. Retirees in the UK and the US seem to be not living as long as the ones in Southern Europe, right? Is that affecting your business? And actually, how do you explain that?
No, I think you are seeing adjustments in mortality tables around the world, and you have a variety of things. In Asia, you see the emergence of, I was in Malaysia last week, the rollout of Pulse, our new digital health app, and you're seeing non-communicable diabetes and illnesses of that category coming up in Asia very quickly. Change of diet, hereditary, they're not sure all of the causes. And there's lifestyle elements in a lot of this. And so I think it varies by market and by band. There's correlation to education, to income, to access to healthcare, all these sorts of variables. And so you've got to do it market by market.
Mike Wells, thank you so much for joining us.
My pleasure.
That was, of course, the Chief Executive of Prudential.